Hello, everyone. Welcome to the Financial Action Task Force webinar on COVID-19 and the detection of money laundering and terrorist financing. My name is Daniel Telesklav. I'm the outgoing co-chair of the Risk, Trends and Methods Working Group of the FATF. This is supposedly going to be the hottest day in Central Europe from where I'm speaking to you today. I'm pretty convinced that we're also going to have one of the hottest webinars that over the time here, because I'm joined by a wonderful group of panelists, both from the private sector and from the public sector. This webinar is based on the results the FATF has already published in May 2020 on a paper on COVID-19 money laundering and terrorist financing risks and ongoing input from members of the global network. This webinar is also building up and continuing from a session we had yesterday on risks related to COVID-19. And let me briefly share with you a few of the conclusions of the session we had yesterday, in particular for those of you who have not been able to join our session yesterday. First of all, we all agreed that the money laundering risks are changing. In particular, because also the criminals are adapting new tactics. This relates in particular to online fraud, cyber fraud, and the use of cryptocurrencies to launder the proceeds of crime. We also noted that in particular, the travel restrictions have led to changes in the behavior of criminal organizations. And in that context, in particular, we noted the increase in cash stockpiling as criminals are preventing from moving cash across borders, which creates an opportunity in particular for law enforcement. But we also noted an increased threat as criminal organizations and criminals in general are looking to invest into businesses that are currently in trouble as a result of the economic downturn. So we had a lot of areas that we detected that were of higher risk. We then also asked ourselves the question whether there are areas of lower risk arising from the crisis. And so far, this is too early to conclude on that. Also, with regard to terrorist financing, we have come to the conclusion that it's too early to point to specific terrorist financing risks. This is not going to be over soon. This will keep us busy for a long time. Certainly, when we look into areas such as the potential abuse of stimulus measures of governments, then we certainly see areas where this has an impact on mid and long term. We also had a good discussion on a number of vulnerabilities. And certainly the absence or lack or nearly complete lack of on-site supervision of reporting entities means that both supervisors as well as reporting entities need to adapt and need to find new ways how to conduct that work. We also noted the increased use of technology on the positive side by both reporting entities and by the authorities. Also the way we communicate to each other. But also we are worried about customers of reporting entities that may not be familiar with these new technologies and therefore can be vulnerable to attacks from criminals. And certainly we all agreed that if not now, then when would be the perfect time to further invest on public-private partnerships. And I'm convinced, knowing the panelists present today, that this is a leitmotif also of the webinar today, to share experiences on public-private partnership and to make a call to further expand them. Let me first thank all the Financial Action Task Force members and the members of the regional bodies for contributing to that work. And of course, I already now very much thank the distinguished panelists who have joined us today, which I will introduce in a second. We will also make use of an interactive tool, and I kindly ask the Secretariat now, the media team, to display a first poll. We're asking you a number of questions. Don't worry, we don't track down on your responses, but we want to feel a little bit the mood here in the virtual room. And the first question where we ask you to give us an answer is on, what do you think are the biggest challenges both public and private sector are facing currently when detecting money laundering and terrorist financing? You have to choose one, or you can choose several of the answers that we have prepared for you. So can I please ask you to think of an answer and then submit your answer? In the meantime, I will go through a number of housekeeping points. So the structure of the webinar is a bit similar than on the one yesterday. We'll start with a short, brief presentation by the Secretariat on the main content and finding of the FATS work relating to COVID-19. We will then have a discussion among the panelists, and then at the end we will have reserved sufficient time to go into questions that you have been asking. So I kindly ask you and invite you to submit questions using the Q&A, questions and answer functionality in Zoom, which you will find at the bottom on the right side of your screen. Please note that the webinar, including also your questions, are being recorded, and the webinar content will be made available on the website of the Financial Action Task Force after the meeting. So I think we now have enough answers, so I quickly ask the Secretariat to display the results of the first poll. And this allows me also, we can see that's a very equal picture of the different answers we have received. So there seems to be a number of challenges. None of them is really well ahead of any others. So I'm curious also to hear from the panelists if they have any immediate reactions to the results of this poll. And this allows me also to give the floor to the 4 members of the panels and inviting them to quickly introduce themselves. Let me start with Valerie Tay from Singapore. Valerie, please, the floor is yours.
Hello, everyone. My name is Valerie, and in Singapore, I work with the Monetary Authority of Singapore, which is the financial regulator. And my job is policies and supervision for the combating of anti-money laundering and other financial crimes. On reaction to the answers to the poll, I certainly agree that one of the core areas that has come out as a challenge in this crisis is the ability to continue to assess whether the customer's activity are legitimate. And the crisis has made it a lot more challenging because customer behaviors have changed acutely to react to the economic conditions. So that's, for me, is the single most difficult challenge that's confronting both the financial institutions and ourselves.
Thank you very much, Valerie. Next is probably a familiar face to many of you, my dear colleague and friend, Henny Verbeek-Kusters. Henny, please.
Thank you, Daniel. And it's an honor to be a panelist when you're a moderator. I'm Henny Verbeek-Kusters. I'm the head of the FIU, the Netherlands, and I have recently been re-elected as chair of the Egmont Group of Financial Intelligence Units, where we have now 165 member FIUs. If it comes to the poll question, what struck me is that if you would probably have asked this question a couple of months ago, then probably much more people would have chosen for the challenges with remote working. And it looks now like we have all more or less adapted to that situation and are looking more ahead and to the content of the work, meaning what impact does the crisis have on the actual money laundering, terrorism financing risks? And actually, I also noticed that a lot of participants are looking ahead. What is coming? What is still to come? What do we have to be prepared for? And for me, that's a bit reassuring that we are at the stage that we have adjusted and are looking ahead. Thank you.
Thank you very much, Henny, and congratulations on your well-deserved re-election. Next is Marcus Rogart. Please, Marcus, the floor is yours.
Firstly, many thanks to the FATF Secretariat for inviting me onto this interesting panel that I hope everyone will enjoy in the next hour and a half. My name is Marcus Fogart. I'm working here at HSBC. I am responsible for financial crime within our retail division, now our wealth and personal banking division, as well as across all our divisions in Europe. I mean, I think what is interesting to me out of the poll results, and very much as Henny described, even if you had asked before the pandemic, if there was a pandemic, what it would have been the remote working. But I think actually a lot of the financial institution partners that I speak to were exceedingly surprised by how quickly, within a matter of weeks, we were able to move online almost seamlessly. But I think what I'm seeing in terms of risk is to those maybe third and fourth bullet points, the significant change in activity. It's not just online, but trading activity, transactional activity has made it increasingly complex for us, because one of our key defenses in the industry is our transaction monitoring. And that transaction monitoring is built off profiles and transactional behavior over the course of time. We are now having to try to look at that profiling on shifting sands that are changing almost daily. And I think it is by far one of the biggest challenges that we're seeing in the industry at the moment. I think those are the key points, but I would say that amongst my responsibilities, along with my esteemed co-chair, Bill, who will introduce himself in a second, I think the Wolfsburg group has been really focused on how do we support the industry in dealing with the challenges of COVID. And I think you've heard it already there from Daniel. The change in fraud is one of the biggest challenges that we are seeing on a day-to-day basis at the moment. Thank you.
Thanks a lot, Marcus. And we will go into more detail on a number of issues that you raised. Looking forward to that. You mentioned we also have William Fox with us, who now works for the Bank of America, but is of course also known in his previous function he had at the time at FinCEN. Bill.
Thank you very much, Daniel, and thank you for the FATF Secretariat to include me. It's an honor to be on the panel, and I hope you find the discussion this morning interesting. I'm going to I'm going to focus on, as far as challenges go, I'm going to focus on what Marcus said right at the end, and that's fraud. And I'm taking a particularly U.S. perspective here. We have had, our governments, both at the federal and state level, have had significant action as a result of the COVID-19 crisis, if you will, have taken significant action to give relief, whether it's relief to small businesses, relief to certain sectors, and relief to people in the form of unemployment benefits, in the form of a program, loan grant programs to sort of bridge the time when we as a country were shut down at one point. And of course now, as the curve heightens again in the United States, are inhibited, I guess, from conducting business in the way that we knew business was before. And what we have seen is, frankly, an explosive growth in fraud aimed and directed at those benefits. The governments are in a very difficult position because they have to balance the risk, right, of getting, they want to get money into the hands of people who need it as quickly and as efficiently as possible, and at the same time to take reasonable steps to protect fraud. And the way we see this displayed is, as a large bank in the United States, we're either assisting states, for example, in the distribution of those fraud benefits, or we are actually the recipients of fraud payments or fraudulent payments that actually end up in what we call mule accounts or transaction accounts. So we're detecting that both ways. It's an explosive growth. And I think that through this, we have really seen the sophistication of the criminal networks that are involved in this fraud. Because we actually, I think the people that are studying this are beginning to believe that actually they have been holding, this is all based largely on identity theft at the beginning, or some sort of synthetic identity. And I think what we're seeing is that they are now, it's almost as though they were holding this information for a while, waiting for a chance to jump, and they have jumped. And so we're seeing significant losses. And of course, governments and both at the state and federal level can hardly afford those sorts of losses. And so we're doing our best and doing a pretty good job of detecting that, educating the states, educating the federal government agencies that are working on these programs to try to interdict and help that. I can only tell you this: the critical thing, and one of the best things that have come out of this challenge is it has continued to reinforce and strengthen the public-private partnership that we have with our law enforcement agencies, with FinCEN, with our regulatory agencies here in the United States. So it proves the continued hypothesis that the closer we work together on these issues, the better chance we have to actually get at the real criminal.
Thanks a lot, William. And having you on that panel along with Marcus is probably a manifestation of that not so new approach. In some countries it's well established. Some others will have to gear up a bit to get to that point where you in the Netherlands, UK, Singapore, and the US already are. Okay, great. So as mentioned, I now have the pleasure to hand over to policy analyst Mei-Lin Wong from the FATF Secretariat. Mei-Lin, can you briefly update us on the work FATF has been doing and where you are now?
Yes, thank you, Daniel. As part of the FATF's response to COVID-19, as Daniel mentioned, we published a paper in May on money laundering and terrorist financing risks and policy responses. Since the paper was published, the FATF has continued to monitor the situation globally, and I would like to give a high-level overview on some findings and issues relevant to the webinar today. So, first of all, as an overall remark, it is fair to say that COVID-19 has had a real impact on government and private sector abilities to implement anti-money laundering and counter-terrorist financing obligations. The institutions and systems that were more prepared to deal with general crises, with things like better business continuity planning, and those that were further along in their use of digital technology, have found it easier to adapt and respond. The crisis shines a spotlight on areas of weakness that were previously hidden, and those systems that were less prepared have struggled more to adapt. However, the vast majority of our members are reporting that systems have proven to be remarkably resilient, and facing this unprecedented crisis have adapted well. I want to now give a quick summary of what is being reported in three key areas: Sdr reporting, suspicious transaction reporting, Fiu operations, and supervision. So on Sdr reporting, overall our members are reporting a broad range of trends. Some are reporting lower volumes of SDRs being filed compared to the same time last year, which is largely being attributed to reductions in the volume of transactions being conducted following lockdown measures. Many are reporting that there is no change in the volume of SDRs being filed, and many are also reporting a high number of SDRs being filed, higher than they were seeing at the same time last year, particularly in relation to COVID-19 related activity, including criminal activity like frauds and scams, also in relation to government stimulus measures. Some are also reporting surges in SDR reporting related to contraventions of lockdown measures, where contraventions of those measures by certain businesses would be considered to be against the law in that country. Secondly, on Fiu operations. Globally, FIUs have remained operational throughout the crisis. However, there are some concerns that FIUs in lower capacity countries may be less resilient to the crisis. General challenges for FIUs have centered around allowing access to secure or confidential information remotely. Further, those FIUs which had not digitized their reporting and dissemination systems before the crisis have had to adapt rapidly to digitize those paper-based processes. Thirdly, on supervision and monitoring of compliance. One of the main issues reported by members has been the need to cancel, postpone, or otherwise adapt the approach to on-site inspections. For the most part, supervisors have adapted by substituting these on-site inspections with desk-based ones, supplemented by the use of video conferencing or other virtual solutions. Turning now to solutions and responses. In terms of solutions, common practices that have been highlighted by our members as being pivotal in their response to COVID has been flexibility, ongoing engagement with the private sector, and support for technological solutions. We also want to emphasize that there is no one-size-fits-all approach that can be applied to all jurisdictions. The appropriate response will depend on the context and risk situation of each individual jurisdiction, and the risk-based approach, which is one of the defining features of the FATF standards, helps all jurisdictions, particularly in times of crisis. Understanding the evolving risk situation and knowing which areas are higher risk and should be subject to increased focus is crucial in helping respond to crises by allowing limited resources to be deployed in the most effective way possible. More detailed information on policy responses to COVID-19, the evolving risk situation, can all be found in the FATF's paper, which is available on the FATF website if you have not seen it already. Many of these issues I've touched upon will be discussed in much greater detail in the course of this webinar with our panel of very distinguished experts. So thank you for your attention, and back to you, Daniel.
Thank you very much, Mei-Lim, for your presentation. It really sets out the stage and gives us a lot of hope for the discussion that we are going to have now over the next 50 to 60 minutes. Let me start with questions to all four panelists from your perspective, and also drawing from the discussion we had yesterday. What are the predominant challenges associated with COVID-19 and the detection of money laundering from your perspective? Heini, can I start with you?
Sure. Well, within our jurisdiction, it is not something new. It is not something revolutionary. But when the epidemic hit Europe, we were all of a sudden confronted with a new scarcity, and that was scarcity of protection gears, of machines for oxygen in the hospitals, etc. And we had to deal with parties who were simply not used to operating in a domain where they could be confronted with fraud. So as a matter of fact, if there's new scarcity, there will be criminality attached to that. And that's exactly what we have seen. We've seen it all around Europe. We've seen it all around the globe. But one of the first examples we had, I think, was a beautiful example, if you may say it in these circumstances, but where a bank simply picked up the phone to call one of the members of my staff who's always in connection with the banks, mentioning, I'm requested to make a payment of €1 million. That's the first payment of what has to be a €35 million payment for protection masks. But the way I have to do it doesn't feel okay. So the advice was, send it in as an SDR immediately. We have picked it up immediately. We have looked into it, and we have identified that there were certain definite red flags making use of pay checks, which is not usual, making use of a company in a country that has nothing to do with this kind of gear, etc., etc. So we were able to stop it there. And we have had several of these cases, and the first convictions have taken place. So that was really the first thing. Then the second is the subsidies that government is rolling out in a very fast speed, because the money has to get to the people who need it. That's obvious, but it's very easy to commit fraud with that. Well, Bill has elaborated on that already. What we have done there is that we have joined forces immediately with all parties involved, including law enforcement, building up what could possibly be the MO with all these several kinds of subsidies that are there. We have been talking to the reporting entities. What could you, in your profession, possibly see as SDRs, UTRs in our case, connected to this? And we have made agreements with law enforcement on how to deal, who is going to deal with what. And this has led to well, I might say quite a good production chain, and has led to quite some files that indeed have been picked up. And then the last thing is looking ahead, and it has been mentioned earlier, it's the new vulnerabilities of companies, of private sector, due to the economic crisis, who will be more vulnerable to criminals, who have also to adapt to the new situation and find a place to invest the dirty money. That's the first thing from a jurisdictional perspective. What we did in the Egmont perspective is that we also noticed this pandemic, it will roll over the globe. So what ECOFEL, the capacity building structure of the Egmont Group, has done is organize roundtables where FIUs from around the globe could share experiences. For those who had undergone certain phases, could share their experiences with those where it was still to get, for them to be better prepared. And what we have also mentioned to our reporting entities is take care. With us, the scarcity is over with the protection gear, but it will continue in other parts of the world. You might also be used to do fraud with this gear at other parts of the world. Well, this is a hint of some of the things we did, and this production circle, as I may call it, we have reproduced it several times based on what we received as reports, what came out of that in law enforcement, feed it back to the reporting sector, and like that, continue to be on top of it as much as we can. I would like to leave it at that for this. There's much more to say, but we'll get to that.
Definitely, we certainly go back to some of the issues you raised in more detail. Marcus, in particular, on the detection of money laundering and potentially terrorist financing, what have been your main challenges?
Yeah, and I think as I mentioned in my opening remarks, the fact is that we had a period of very tumultuous market activity at the beginning of the crisis as the markets reacted to the closing down of the world. That threw all our detection scenarios completely off. And what we have seen since then is that volatility in client behavior has now spread to our retail client base, where we are seeing significantly different patterns. And this means that our previous scenarios are not operating as effectively as they once were. So I think that's perhaps the biggest challenge that we have seen in trying to ensure that we have fit for purpose scenarios in our systems. But I think we know in the industry that actually the front-facing staff are one of our key defenses. We spend a huge amount training our staff, and their sense of when something smells wrong is actually a very, very strong predictor of where we will file a SAR. And most of our FIU colleagues, I'm sure Henny would agree, will see that, you know, depending on jurisdiction, you will have maybe half or even more of the SARs produced originated from customer-facing staff. Now, of course, those staff are not meeting those customers in the same way. Now, at least in the UK, we have kept our branches open, but it's just not the same in terms of being able to detect behavior, because the smell test that they go through is slightly different, given that everyone's acting slightly different because of the crisis. So I think those are, you know, two of the real key challenges in terms of our monitoring. I'd say one other challenge that, you know, you've heard there from Bill and Henny is, how do we deliver the stimulus programs at pace, meeting the treating customer fairly conduct agenda of our regulators, while also maintaining the right level of fraud control? So it's a huge challenge, and I think, you know, that's externally. Internally, I think the key fraud challenge for us has been that for a number of years now, fraud and financial crime compliance have becoming closer and closer in some of the big institutions. And now we need to also align our cyber defenses there. And I think when you're setting up those kind of new task forces, those kind of new teams, if they're all in the same place and talking, it's a lot easier. But we've been having to get those teams to interact virtually, and I think that's one of the other big challenges that I would call out that we're currently facing.
Thanks a lot, Marcus. Bill, anything to add from your side, or have you faced similar challenges as Marcus?
We have, and I won't repeat them. I think, you know, we are a very large retail bank in the United States, and while many of our branches are still open, you do not have the eyes and ears that people on the ground actually do provide with you. But I think one of the things that we did at the beginning is really realize that we have to monitor almost on a day by day basis and report the performance of our systems, what we're seeing as far as transaction volume goes, what we're seeing as far as cash level goes, at a pretty granular level, right? At not only a country by country level or office by office level, but also at you know, even regional or cities in some cases, and that establishing that reporting was very challenging at first, because especially we were at the same time going through, you know, the transition from working in an office, you know, barely in hubs, fairly, you know, with people where you could, you know, lean across the desk and ask the question, and that's now a phone call and or a conference call, and so I think that you know, we once we established that reporting, that actually made a big difference, because we could see the changes in what were happening as far as you know, risky or riskier behavior that we could then dive in and really focus on. I think, you know, I think there's been a lot of talk about the move to digital, and that by the way has been a trend anyway, right? We've seen that for a long time, and what you lose with a digital transaction is the context that a face-to-face transaction can help with. But what you gain with the digital transaction oftentimes is actually more transparency, right? You know, it's not a cash transaction. You actually know who's conducting the transaction. You see it, and you can follow it, right? And so it's kind of a 50-50 proposition in that regard. We actually, I think if you talk to my team, we gain incredible benefit from our frontline eyes and ears, and I would never want to lose that. It really is true that the balancing of that, the digital does afford us a chance to network those transactions when they occur, and to provide perhaps more useful information to law enforcement as we go forward. But that's the twist I would put on it. But basically, it's the same thing that Marcus had said. You know, we've got the same challenges with automated detection and other things. So.
Thanks a lot, Bill. So no coincidence that one of the key priorities of the new German president of the FATF is the digital transformation, which has been a topic, has probably been accelerated now in the current circumstances. So certainly the right thing to do. Brings me also to Valerie, who has not only the senior position in Singapore, but is also the colleague co-chair of the policy development group in the FATF. So what have been the main challenges for you in the detection of money laundering in this crisis?
Thank you, Daniel. I just wanted to start by picking up on your last point about the work that FATF will be doing to encourage industry as well as policymakers and supervisors to embrace the use of technology to improve detection of financial crime and detection, of course, with a view to disrupt. So there will be, in the next course of the 1-2 years of work that we have envisioned, opportunities to deep dive into use cases, the challenges for implementation of these use cases, and maybe a need to change policies as well as legislation and the requirements in order to allow for jurisdictions and financial institutions to embrace this hopefully a more effective way to detect financial crime. Now back to your question about what were some of the challenges and some of the issues that we are confronting in Singapore. And it's no different from what the other speakers had alluded to. But I think for us, it is important to focus minds now and use this, change this challenge into an opportunity. At the core, our work is to be more timely and to better analyze customer behaviors and to make an assessment of whether that customer is acting legitimately or illicitly, and in a more timely and more effective way. So in Singapore, we're focusing minds around doing more dynamic risk assessment of customer behaviors, and very pertinent at this point in time, because in my first comment today, I said that the economic crisis and the conditions under which we are operating in has changed customers' behaviors acutely. For financial institutions to now make sense of whether these behavioral changes are significant from a financial crime perspective, that's the core work. So there were discussions earlier about using public-private partnership. We have that in Singapore as well. Our next phase in the public-private partnership is to be able to scale information sharing between financial institutions of risk information that's relevant to detecting and being more dynamic in detecting customer behavioral changes that could lead to illicit behaviors or illicit activities. So I'll just stop there. I can circle back to discuss a little bit more about what we have in mind. Thank you.
Thank you very much. Very interesting, Valerie. And towards the end, I certainly want to go back to the issue of the role of public-private partnerships have and the potential they have in this responding to this crisis. But now moving from challenges to response, can you share with us any examples on how we responded to this changing environment that we're facing since February, March, from a money laundering or terrorist financing perspective? Henny, you already gave us some examples how you and Egmont responded, but feel free to share any other you have been developing or are about to be developed.
Yeah, well, just shortly, indeed, it's about cooperation, communicating, and circulating that. It's about bringing together the partners who have to play a role. And we have sent out several newsletters, as we call them, to our reporting entities, and we have repeated that several times. And what I personally have done, I have had newspaper interviews, I've been broadcasted on radio also to share with the broader public. This is what we do from the public side with regards to fraud that is related to the scarce material that we all will be in need of, and what we do to prevent and detect fraud with the support measures that our government has taken. That's something that I've done quite often in the first weeks when we had started this off, and this has in any case changed a bit the public ideas on how will this work. And again, as mentioned, we also from the Egmont perspective believe it is important to share what you have experienced in your own jurisdiction more broadly. So that's exactly what we have been doing.
Thanks a lot. Thanks a lot, Henny. Turning to Valerie again, I think this is, in a way, this has also been a test whether and to what degree our systems are resilient. And I think you know better than I, but I learned that the Chinese were for crisis has two components: one being danger, the other being opportunity. So how have you responded to that changing environment, take into account that it's both a danger and an opportunity?
Yeah. So like Henny and many of my counterparts across the world, we've also made sure that we've kept industry close to us by issuing advisory and guidance. So advisory on the typologies and the evolution of the typologies as we see it, but also with inputs from them. And then also guidance on how to use the risk-based approach. So, and this is important, the guidance on risk-based approach application is important because it gives confidence for our financial institutions to concentrate and prioritize higher risk activities in their lens, to scrutinize, and to be able to do with confidence lower risk clients, deal with them through simplified due diligence, or be prepared to delay some of these measures with respect to lower risk clients, so that they can galvanize the resources to prioritize detection of typologies related to COVID, for instance, or detection of typologies that may evolve during this period in a rapid way. Going back to your point about the opportunities that we see from this crisis, I will put them into two buckets. One, what the financial institutions themselves can do, and two, what the system, at the system level, what we as regulators and law enforcement and FIU colleagues can come together to do. So let me first talk about the first part, where we've encouraged financial institutions to integrate more dynamic elements into their risk assessment for customers. So in addition to the traditional sort of feedback loop from transaction monitoring into customer risk assessment, we are asking our financial institutions to, of course, use data analytics and to deploy machine learning to be able to detect unusual or nuanced changes in customer behavior that could signal something else. Behavioral red flags from the beneficial ownership perspective, from the related persons, from counterparties, and use network linked analysis so that these behavioral changes make sense, can be sense-made, and they can then follow through to take the mitigation measures. So that's what financial institutions have been encouraged to do. And we've seen them, because of the COVID crisis, focus their minds around making these more effective. To be clear, it is early days yet. The deployment of machine learning to be able to detect these unusual behaviors and make sense of it is early, but the focus of minds to do that is important. The other category of efforts that we are sort of focusing our minds on and co-creating this through our industry partnership is to be able to allow financial institutions to share risk-relevant information about customers, so that Bank A can share information about a customer with Bank B, Bank C, Bank D, and follow the money trail in order to be able to figure out whether this customer is suspicious. Now, if done well, this is a very critical tool for the banks, not only from a risk management perspective, but it could also provide competitive advantages to the banks, because they can then retain good customers, even though these customers may exhibit some red flags. By sharing the information with other banks who have similar customers, they may be able to make sense of the red flag, address it with the customer, and still be able to retain customers. Conversely, by sharing information across financial institutions, if they figure out that this customer is more trouble, has a lot of unusual activities in other financial institutions as well, then this is a real signal for them to get out of the relationship and to file the necessary SCRs to law enforcement. This capability, in order to succeed, must be done at scale. So there are many ways to do this. One way is to pool transaction information together, apply analytics over the transaction information. But we are also considering other options in order to share behavioral changes as well among financial institutions. So I'll stop there, and then maybe we can come back and pick up on some of the elements in this area of very exciting work. Thank you.
Oh yes, indeed. I'm getting more and more excited. And I'm pretty sure that our private sector friends would like to respond to that. I'm turning to you in a second. Maybe picking up on Valerie's first point also on behavioral indicators and use of financial profiles to detect money laundering. They haven't been built for the crisis. They were there before. So how happy were you? How well did they cope with the situation? Is it still the general principle you would like to apply? And what do you think about the other ideas that Valerie just brought up? Marcus, can I start with you?
I think Bill wanted to say something there, so I'll let Bill step in first.
That's okay. I was just excited to hear what Valerie said, honestly. I have to say, I think that the 2 points you hit are really the key points going forward in the in the success of financial crimes, and starting with the customer risk assessment, which really must evolve to a behavioral analysis, not a transactional one necessarily. That's part of it, but nor can it be an attribute analysis. We've got to get away from attribute analysis. This is, you know, if I am this type of customer, I'm high risk, right? What that does is add chaff to the system. It doesn't properly focus us. The way to get at this risk, I think, in a financial institution is through behavior and how a customer behaves, and what that requires is actually to define both good and bad behaviors. And to your point, Daniel, this is the change that has occurred in COVID, right? Because we're all behaving differently. I am behaving very differently at this very moment than I was 8 months ago, right? And so we have to, I think we really need to as prudently or move with judicious alacrity, let me put it that way, to actually get to a point where we can actually make those changes and tweaks to our customer risk assessment in order to be able to get out financial crime. At the end of the day, we all think about geographic risk, we think about product risk, all of that's important, but there is nothing more important than the customer, because the customer is the thing that actually presents the financial crimes risk. And if you understand your customer, and there's good and bad customers in every jurisdiction, there's you know, it really comes down to the customer. So I was really excited to hear what Valerie said. I think that is spot on. The other thing that she said is something that we've proven here in the United States with the authorities that were given to us under the USA Patriot Act, under Section 314 of that act. I know the Patriot Act isn't the most popular thing these days, but to be honest with you, in Section 314, it permits not only vertical sharing with the government, right, of information when there's potential suspicion, but also sharing with peer institutions. And we're involved in an initiative that is trying to leverage that in a much broader way. And what I can tell you is every criminal network, I am convinced, that worth its salt, right, is taking advantage of the dark spaces between institutions. Any criminal network that has a concentration risk at a financial institution isn't a very smart crowd of people, because they're going to get caught, right? Where institutions, where real criminal networks work, is they spread that activity across a number of institutions, probably a number of jurisdictions. And in order to really get at that activity, you have to share information horizontally with those institutions and vertically. And this initiative, we have proven the case that if you eliminate that dark space between institutions, it makes a huge difference. Now, there's big public policy issues here with this, right? Privacy, everything else. We have to remain focused on, and this sharing has to be done above board so that it can be inspected post, so that there's nothing untoward about it. But the fact of the matter is, the safety and security of our jurisdictions and the transparency of our financial system really relies on us being able to get at these very sophisticated criminal networks, and the only way we can really do it is through information sharing.
Daniel, you're on mute.
Oh, sorry. Yeah, thanks. Yeah, thanks a lot. Very interesting discussion we're having. I'm mindful of time. I wish to talk about that for much longer, but this is the start of the discussion we're having now, and I think we'll remember today when it started and why. Turning back to Valerie, a piece on supervision, maybe. We had a discussion also yesterday in the webinar on the impact, you know, of COVID-19 on supervision, and certainly predominantly on on-site supervision. So you're working for one of the most professional supervisors here, a prominent one in Singapore. So what were your main challenges relating to supervision and compliance as a result of the crisis?
Right. So I was listening to the webinar yesterday as well, and I do share the sentiments expressed that obviously we can't go on site as supervisors, but there's a lot we can do off site, and that's exactly. So we switched to a modus to operate off site, and luckily for us in Singapore, most of our financial institutions are able to provide us the necessary information that we need digitally. And the way we conduct supervision in Singapore, we do pretty much a very deep dive into the transactions that the financial institution have been responsible for. So our typical modus operandi is before we go on site, we will ask for 2 years worth of transaction from the financial institutions. We take that in and we apply our analytics over it, and we identify unusual patterns of transactions that matches or does not match with the customer sort of KYC information, and then we quiz the financial institution about these sort of patterns that we see. And the deep dive that we do is very important for us, because then it allows us to have deep conversations with the financial institutions to understand where the controls have failed and what the root causes are, and then the fixes will come. And to be able to do this during this crisis is critical for us. So luckily for us, we've been able to pull the information in through our channels, and our data analytics can be done remotely. So all of us are working from home. My officers are all working from home, and we are sort of zooming in or WebEx, using teleconference facilities to go through all details with our financial institutions as much as we can. And then there's, of course, the sort of written process and questions and answers. So not impossible, a little bit more challenging, but we are doing it. The other thing that we're doing is also to have a whole lot more engagement with financial institutions outside of the inspection space. So inspection is, you're going in to identify sort of control issues, right? But I think because of the changes in the environment that we're seeing, for us, it's also important to connect with the financial institutions at that level to understand the challenges that they are facing. Are there clarifications from a supervisory expectation that we should be offering? Is there further guidance on how to apply certain sort of risk-based measures that financial institutions may be even more challenged to do so during this period of time? So we've had that engagement as well, and from this engagement, we've picked up clarifications that the financial institutions would like us to provide, and we provided them in a Q&A form to all financial institutions. The third sort of tool that we've used is, again, the public-private partnership. So we've pulled the key banks in, asked them to share with each other what were some of the methods that they've used to overcome the COVID challenges. And our partnership is called ASIP. Our ASIP bank then published a paper to share with the rest of industry to explain what were some of the challenges that they had and how they overcame those challenges, so that everybody sort of benefited from those experiences. So these were some of the issues that we've had to deal with. But I agree with many of my colleagues mentioned earlier. Actually, these teething issues we've more or less overcome. Now the challenge and the focus is on being able to do the risk assessment more dynamically and being able to do the information sharing at scale and in a productive, streamlined manner.
Thank you. Thank you very much for sharing these views with us. Again, this could be a topic for an entire webinar, but there's one other element I really want to talk to you is on the day-to-day operations. We are all practitioners. We have over 1,000 now participants in this webinar. I'm sure lots of participants are also working on day-to-day challenges. And here again, we have prepared a question, and we were wondering if you could give us an answer, and I kindly asked the Secretariat to come up with the second interactive audience poll. And here I very much trust and invite and encourage you to give us a very honest answer. Your answers are not going to be recorded. They are not going to be sent to your supervisors. And I will ask for the same honesty and scrutiny to our panelists too, when I'm asking them the same question. Basically, the question is, how well have we dealt with the pandemic? How well were our contingency plans? So I'm really curious to hear from you. And again, this is anonymous, will not be shared on an individual basis. I'm really curious to hear from you your own self-assessment here. How well have we coped with the situation so far? And I'll give you a little bit more time to submit your answers. And then we will again invite panelists. I think Marcus, maybe if you then can start. Let's give a few more seconds till we see the results. Or maybe Marcus, you can already start telling us how both, Wolfsburg Group and HSBC or the industry in general have coped with that situation. How good were we?
And as I think I mentioned previously, I think most of the financial institutions were surprised at themselves, at their ability to, within the end of the second week, we were 80% of our staff globally were logged in and operating effectively. So I think it was a surprise to the institutions and a surprise to the workers in those institutions. And I think what was heartening was the ability, even though perhaps some of our government colleagues didn't have the same technology, for their ability to immediately get on calls with us. And this is to the public-private partnership points that we've made previously. I think we have, in the Wolfsburg Group, talked for a long time about the importance of this. We highlighted it in our effectiveness announcement in December of last year. But I think the COVID crisis has told us more than any other thing for me is that the only way for the industry to evolve in terms of how we are working together to fight financial crime is the public-private partnership. This is the answer that COVID has brought clearly into focus. And I think it's absolutely essential that the learnings that this has given gets built into the way that we interact globally on a go-forward basis, the way that we design regulation and international standards on a go-forward basis. And so, it just proves that an online world is far closer than perhaps any of us perceived. And I think what the key outcome of that for me is, to Valerie's point, unless institutions invest heavily in data analytics that is supported by regulation that allows us to share information cross public-private and private-private, this is not going to really turn the dial without that capability. And the investment that we're seeing in HSBC actually is that the machine learning capability of big data analytics means that when you come to a crisis where every transaction is now different, means that in the past where you have an analog transaction monitoring system that could take 6 months because of governance and changes to put in a new rule, with a big data analytic approach to monitoring and network analysis, you can change that on an hourly basis. And that, for me, is one of the most important things that the industry must learn in terms of its investment case on a go-forward basis with its boards, and for our regulators and governments to learn in terms of enabling that, because only then will we meet the expectation of all the stakeholders to protect the system.
Thanks a lot, Marcus. Turning to William now, you had a minute to reflect a bit on the results of the poll. What would you have said? What answer would you have given, Bill?
I think that, well, let me first of all, I'm gonna just grab everything Marcus said and affirm it without repeating it. So well done, co-chair. I think that listen, I will tell you this. I think that, and this may seem a bit more pedestrian if I can say it that way. We went, I'll just give some facts. At Bank of America, we went from roughly about 1,500 people out of 206,000 employees working from home on a regular basis, authorized to work from home on a regular basis. We all had remote access, but it was that was the number, to about 190,000 in 10 days. And we literally, there's stories that we literally bought truckloads of laptop computers, right, to enable that. new laptop computers, and of course, significantly enhanced our ability to securely remotely access our networks and systems. And that came up, honestly, when you think about it, fairly much without a hitch. I was very proud of our CIO group. I think that they did a remarkable job. The more interesting challenge, honestly, what we realized very, very quickly is just pure communication. I think it was Henny that mentioned this earlier. Communication is so key. And we sometimes don't recognize how much communication gets done just seeing someone in the office and bumping into them, in the hallway or down in the lobby of the building or whatever it is, and all of that disappeared overnight. And so what we did actually within the first week is establish, a daily huddle with our entire management team for our group across the globe. And every morning we do it Asia-friendly time for us in the U.S. because it gets pretty late if we get during in the day in the U.S. We meet and talk about the big things that are going on that day, half hour, and then we have increased. We've instructed our managers to have a daily conversation with their teams because they're all remote now, and staying on what you're working on, how you're getting across. That all sounds very pedestrian and maybe very obvious, but at the time it wasn't really that obvious. That will be something that will stick with us as we exit whatever environment this is and whatever the new normal is going to be. It's going to be something different than what it was before, but I will guarantee you we will carry that across. That has had a remarkable benefit for our team, right? And then I think the other thing is it's really just thinking about, I think as we go forward, really beginning to think more about not if something is likely to occur, but maybe more what if it occurs. And I think that this gets into sort of scenario planning and really kind of thinking about it, because what we've learned is that while our business continuity plans, we all have them, were very, very good, and they passed muster by anybody's review, they actually really didn't hit the mark. And this was something that we learned that really was a surprise to me, because we put a lot of time in that. For us, we were one of those critical functions that needs to be up right away, because we run the sanctions team. We run, that stuff has to happen right away. I mean, that if we had a disruption, it has to happen right away. And what we learned is we've learned a lot through this crisis about how we do it. And I think it may, this is a little bit more ethereal, but I think it's important for firms to think about scenario planning or wargaming some of these things out in a real serious way. We have found, candidly, in all candor, I don't think we're that good at it. We do it, and we do it with purpose and need to be good, but we're actually talking about trying to get either some of our former military people, probably who do a better job of wargaming than anybody, right? Because they simply, it's life or death, right? And that, so for us, I think that's something that we need to, as a company and as an industry, frankly, really think about is what this has been is a wake-up call, right? And the importance of continuity and the ability to remain, to be able to serve our customers and serve the system, but then also to make sure that we're doing that in a way that is with as little disruption as possibly can happen.
Thanks a lot, Bill. In particular, also what you said about communications. I think that some have chosen to go up early, quickly responding, communicating on that. As Henny, you have mentioned already. Others have chosen not to do it, and I think they may pay a high price in letting people in the dark in these difficult times. Anything else on day-to-day operations that you have witnessed? I can see you're working from home, like we all do. How did that work in the Dutch FIU and in the Egmont Group? I know you had a plenary planned for July.
Well, while listening to the others, I was thinking, am I going to give the diplomatic or the honest answer? So I will decide to go for the honest. We were, as a matter of fact, in the FIU the Netherlands, preparing and having complicated discussions on who might be able to work remotely, in what situations and under what circumstances. And since we cannot work from a regular laptop, we had started already ordering encrypted, secured laptops. So we had some already in the office, but we were still discussing on who can use them in what situation. Well, I can assure you the discussions became very short and easy because the situation was there. And well, really, luckily we were prepared because we had these secured, prepared laptops already available, because otherwise we would have been we would have faced a big challenge. And we have been able to order even more. So that really allowed us to do that. Well, in the Egmont group, indeed, we were supposed to have a plenary where we would have 400 to 600 people altogether at Oaxaca in Mexico, first week of July. Well, it's quite obvious that that wasn't feasible. So we really had to adjust, because it's a meeting where you take decisions, where you have discussions with the heads of FIU. So all of that decision making had to be done out of session. And we had agreed that we were going to dedicate time to the theme of crypto assets as well as mobile payments. And what we did is that we turned the theme into a couple of webinars for the heads of FIU. Also, ECOFEL did some webinars on illegal wildlife trade to assure that there was still an investment possible in knowledge sharing, in more understanding on what are the new challenges we will be facing. It's a first step. We expect we will continue to work on that. So one way or another, that was a challenge. But although it brings a good deal of good learnings and good experiences, if it comes to communication, we also experience now where you reach some boundaries. For instance, in the Netherlands, we have started with what we call the Fintel Alliance, where analysts of the FIU work side by side with analysts of the banks in a secure environment. But of course, we cannot do that remotely because of the sensitivity of the information, and our systems are, of course, not aligned, and I don't think we will ever get to that. So this is something we are trying to resolve now. Can we find a space where people can still be in one room, keeping enough distance? Because this is about building up, about building trust, about having discussions face to face that have to stay within that contained room. And that is really something we want to build on and try to find solutions for. So that's really where we meet some boundaries. And then when you change structures, I can do that as well. I noticed, now I will leave it in your hands. I noticed there are some questions on the transaction monitoring for the Netherlands. I will gladly elaborate a bit on that. I think it's a part of a beautiful chain that we're building, but I'm not sure whether this is the appropriate time. So I will leave that up to you, Daniel.
Thanks, Henny. We're monitoring all questions and see if they come in packages. Before we move to the Q&A session, and we will have reserved some time for that, we have one more poll that I'm very curious to see from this large group of participants where you are. And this poll relates to a long-term perspective. We're in the middle of a crisis. It's far from being over. Things will never be the same as they were, I believe. So if I can ask the media team to display the third and last question we are having here, and this is really on the long-term consequences of the pandemic. And there are a number of options you can choose. that you want to see, or do you think are necessary to be seen? You can choose one or more of the following. Is it mostly on the adaptability of tools used to detect money laundering? Do we need you want to see an increase in the use of digital tools? Do you think that the economic downturn is leading to a long-term decrease of prioritization of anti-money laundering? That would be quite a threat, I believe. Or do you see, that has been mentioned several times today already, a need for better public and private sector coordination and sharing of information? So can I ask the audience to choose one or several of these options here, and then we will display your longer term conclusions. And if I may, because it has come up so often, have an open discussion also on these public-private partnerships. I mean, we all agreed. I think that was very clear here, that we are the preached ones already, because we know what it is. So I'm wondering, I want to start with Marcus and Bill here. What would you tell jurisdictions, countries, regulators, FIUs that aren't convinced yet that public-private partnership? Now, I refer particularly to information sharing public-private partnerships. What is your, also in the light of the crisis, your main points you're having to convince them that this would be now a perfect timing to start doing it? I don't know, Marcus, can I start with you?
Yeah, I mean, I think we've said, and I've said, I think that this is the key learning from the crisis. For those jurisdictions that haven't begun or only at the beginning of this road, I think that there's a number of factors, right? The reason this hasn't happened traditionally in the industry is a trust factor. A trust factor between law enforcement and banks, between regulators and law enforcement. You could put the spider web whichever way you want. And so how you build trust is the initial most important thing to make public-private work. And to do that, it's to start with small, discernible, highly important issues for law enforcement or regulators to begin that. So I think that's the most important thing. You know, in the UK, when we first set up the GIMLIT, we focused specifically on a couple of terrorist cases. This was highly important, relevant information for law enforcement. Off the back of the sharing of that information, we uncovered networks, we led to arrests, and we stopped actual attacks from happening. Suddenly, there was a blueprint and a business case for government and for law enforcement to support these things, because it was getting results that were highly important for them. And I think this is the most important thing, right? Because you can throw up data privacy, you can throw up a plethora of challenges in relation to this, but the fact is, you know, if you share information behind law enforcement and regulatory boundaries on a defined purpose with properly, securely vetted bank staff, you will find the results speak for themselves. And from that, you will then build the momentum to change the legislation, to change the IT architecture, to change the governance structures that work in countries to ensure that you deliver a public-private partnership path that, you know, will actually change the industry. You've heard amazing things from Valerie in terms of what Maz has done. We've seen similar things in the UK, in the US, in Australia, in the Netherlands. But, you know, for me, the fact is how you build that trust for the other jurisdictions that haven't begun down this path or are just beginning is the essential factor to get things going.
Thank you, Marcus. Bill, this is now different. This has been a pretty good pitch from Marcus. So, but you've been one of the early advocates in that area. Anything you would like to add?
Just to add, because again, I'll associate myself with Marcus's comments completely. He's spot on. But just to add, you know, I think that, listen, I'll put it bluntly if I can, and if it's too blunt, I apologize, but if jurisdictions don't engage in this, you're just not going to be as successful. Period. Because if you think about it, we each have information that the other needs, right? And it's like walking down a street and trying to get to the same destination together. You're never going to make it unless, if you get there together, you can make it, right? It's really true. I think there's a couple of other things I would add to what Marcus said, because we could go through the same thing in the United States, so we don't have the time. But one, governments need to prioritize what they want institutions to look at. If everything's a priority, nothing's a priority. Think about it that way. It's true. And in the United States, we have a fantastic initiative going on with the Treasury's Bank Secrecy Act Advisory Group that is working on that, right? So I applaud the U.S. Treasury for the work that they have done in their NFINCEN and the law enforcement agencies that are involved that have really working with the industry to help with that. Trust is key. Trust is the basis of every relationship, from your marriage to certainly this. And so you have to build that trust. And there's a responsibility on both parties, right, to build that trust. And you just have to treat it like that and tend to it, because if you don't tend to that relationship, you're not going to have that trust. For those that are worried about that, take a chance. I would submit, at least from a U.S. perspective, and this is no disrespect intended to any government colleagues that are on the talk today. Banks are better at keeping secrets than governments are, generally, because all you have to do is read the Washington Post or the New York Times to see that. So I think that you've got to really make sure that we we will handle this stuff the right way. The final thing is privacy. We've got to keep that in mind, because the sharing of information or the partnership naturally involves conversations with governments about suspicion, right? Or at least what starts as suspicion. And so you've got to make sure that you build the infrastructure. I think we've done this in the United States, because it's in the financial institutions, whether we're sharing with others. I see some questions about this, or whether we're sharing with our government. We have built strictures that doesn't happen. It happens securely, and it happens in the rare instances where we think we've got something important. And then when you do share, it's, as Marcus said, it just ignites. You can just see a network ignite. And there's nothing more exciting for a financial crimes professional, or for a law enforcement officer, or for an FIU head to watch a network ignite, because then you can attack it.
Thanks a lot, Bill. You compared the AML partnerships to a marriage, and like in a good marriage, you don't always have to agree on everything. You can always politely disagree. When it comes to secrets and who is better in keeping that, I may have slightly different view. Probably being Swiss, I have a complex relationship with secrecy.
Daniel, can I just add one thing?
Sure.
I mean, I think what you've seen across the industry in recent years is open arms to engage with our regulators. And we know we've got over 1,000 participants on this call, and there'll be a number of important people in government, in FIUs, in law enforcement. All I would say is a lot of the things that have turned out to be successful was based on the bravery of one individual to challenge a government department, to challenge a law enforcement department, to build that trust. And so for our kind of public sector colleagues in jurisdictions that hasn't this, really begun, my ask is to be that brave person, because the ones that have been successful, it started with a couple of brave individuals, either in FIUs or in law enforcement or in government, that changed the dial. So thank you.
Good, thanks. You get back to that for sure. It's 2:20 Paris time, so we have roughly 10 minutes left. We started a few minutes later, so I may add a few minutes. And we have got a huge number of fantastic questions. So I really would like, I know we can talk for a long time about partnerships, but let me turn to some of the questions that people came up with. The first one is actually relating to sharing of information on money laundering activities. And it's a question that came from Insan Yo, Tanya McCartney, Bernd Frischert, and others. And they're asking, how do banks share relevant intelligence on money laundering while still respecting data protection requirements? So I think it's not a surprise to you. And to the benefit of time, if I can maybe ask just one of you to give response, and others if they want to add or disagree. So who wants to pick up on that difficult question? You know, how can you share information while still respecting data protection requirements? Any hands up?
I'm happy to, Marcus,
Bill,
if you want to do it. Although you also have a bigger European presence than we do. We're just corporate in Europe, so that may, because the general data protection rules in Europe, frankly, as a human being, I would like to be European in that regard. We don't have those same comprehensive data protection rules in the United States, although we do have very strong privacy rules. And listen, from an institution's perspective, we take this very seriously. Discretion, and we owe that to our customers, and we owe that to our clients. And that is a big part of the banking or investment relationship that we engage in across the board. And but from our way of thinking, I think, is that relationship is breached when someone is trying to take advantage of our institution, and using that institution to further a criminal or worse, terrorist purpose, right? Or non-proliferation, whatever it is, right? You lose the right to that privacy, I think. And that's the way I think we think about it. So when we share, we're very, very careful about what we share, and we're very careful about who we share with. So it's not bank to bank that it goes to a specified group. We all have these groups. We all guard that data very, very closely, because in the United States, that horizontal sharing is voluntary. If you get a bank that misuses that information, they'll be locked out of everybody. They will lose the benefit of having that information. And believe me, it's incredibly useful. And then finally, I think I would just say that the information as it's shared is kept, and then just, banks have a process to destroy that information too, right? So we don't share it and then keep it. We don't share it with our marketing groups. We don't share it with other parts of the bank. It stays within the financial crime space in secure places, and it also is deleted or destroyed once we've either used it or it's been leveraged with the government. Or if we find it not useful, we destroy it. So that's it's really about building reasonable controls around those privacy. And I think on the balance, the public policy discussion that needs to happen, particularly in those jurisdictions with very strong privacy regimes, which again, as an individual, I applaud, has to be a balance, because you can't let criminals hide beneath that, in my judgment. That's a personal view, not the view, but my personal view is you just can't let criminals hide beneath a privacy protection, if you will.
Thanks, Bill. I may also use the opportunity to refer to the great work the UK Royal United Services Institute, RUSI, is doing in that regard. For example, to use technology actually to overcome these difficulties. So have a look at what they're doing. They've just published a, for me, brilliant report on the subject matter. With that, there's been another question that I thought is very relevant, because we sometimes miss that part in the conversation. The challenges that we have discussed coming from a truly global crisis that affects us all, are they also being seen by developing countries in the same way? Are they having the same challenges? Is this something, is this a discussion of developed countries only, or does it affect everyone, if so equally? And I hope I don't put you on the spot, Heini, but I know the great work Egmont Group is doing through its ECOFEL Center also to work in less developed regions. Any early views on that point from the conversations you are having? Is this a third world, or is this a global conversation that we should be having?
What we have seen so far is that it is a global conversation that we should be having, but the way the issues are materializing, they differ. They differ from where on the globe you actually see it. You know, if you are looking at countries where not too many people have bank accounts, then you simply have another financial system with other financial challenges and issues. And it's exactly also for that reason that in our webinars, we have paid attention to the money laundering risks that come with mobile payment systems, because very often if you have not that high banking rates, if I may say it like that, then you see that there is a huge coverage of mobile phones, so there's a huge use of mobile payment systems, and that comes with its own specificities with regards to money laundering. And what is also noticed is that more and more these systems are pushing out the former cash payment systems. So this means this is emerging in those countries, which I believe, if you're talking from financial inclusion, is a good development. And that's also one of the conclusions that came out of the region. But it also brings its own challenges if it comes to MLTF, and that's also the reason why we have specifically focused on that part, to identify what have we learned so far, and how can we assure that we bring that further and learn from one another.
Thanks a lot, Henny. We're nearly close to the end, but I wanted to ask Marcus, and HSBC is a truly global bank. You're about everywhere. Is there anything you see differences, or is there a lot of commonality between industrialized and less developed world?
No, I mean, I think Henny got it right. You know, is that there is across the globe an increased risk, and how it manifests itself is the challenge, and ensuring that you can respond to that. I think it goes back to the point is customer behavior, both legitimate and illegitimate customer, is going to be forever changed, right? And what customer, even my mother, 75, never did digital banking, and now she's doing it everything within 4 months, right? And I think fundamentally this has accelerated a trend that we've already seen in the industry for a number of years. And so how we enable, and this doesn't matter where you're in, because of the mobile payment systems, right, or of perhaps less developed countries, that the point is, unless we change legislation and regulation to allow for more electronic identification, for digital identity, for the ease of mobile banking, and therefore our use of that data to protect the system from financial crime, that's going to be the challenge of the next 2 years for me. And that's what we must laser-like focus on, because the way that someone looks at their mobile phone, the way that they open it, these are all indicators if it's the same person that we're expecting. If we do not use that data, crunch it through those big data environments, I think we're losing a chance to really up the effectiveness of the entire regime, both for good banking outcomes, to make banking more available to those that perhaps were locked out of the system previously because they didn't have, a passport or whatever the case might be. Almost everyone in the world has a mobile phone, right? And yeah. So how we enable enable banking for a broader population, but also enable us to protect that system, that's what we need to think about, I think, coming out of the crisis.
Thanks a lot, Marcus. Many more questions. There's only one I'm particularly interested to hear and answer them from Valerie. But feel free, the panelists, if the questions are really specifically for you. Henny, you mentioned one was specifically on the Dutch system. Please feel free to stay a bit longer if you can in the virtual meeting room here. And you can give an answer directly to the question also using the Q&A functionality if you can, and if you have time, feel free to do that. But the last question, and maybe Valerie can help us with an answer here. But before I ask it, let me also thank Coletta Vesso for the last question on the impact on developing countries, which I thought was very relevant. The last question is from Rowena Bethel, and she asks whether you think that different types of regulated entities have been able to adapt and respond during the pandemic, or whether any particular sector faced particular difficulties, for example, when filing SDRs. So is it all one size fits all, or have, for example, financial institutions reacted differently than non-financial businesses and professions? Valerie.
Thank you for that question. And you're absolutely right. I think different subsectors of, and my role is to oversee financial institutions. So that I will confine my answers to financial institutions. Different subsectors of the financial sector face different challenges during this period. But I think the banks have it the hardest. Why? Because they have the large pool of customer base and customers that are confronted with difficulty in accessing banking services and difficulty in responding to risk queries from the banks, and difficulties because they have to adjust their behaviors to explain it to the banks when they are queried. So I think the banks have it hardest. But having said that, insurance companies also have had many customers coming forward to them to ask for special dispensation because of the situation that they're in. And again, they need to be able to make that assessment whether or not those requests are legitimate or intended to hide certain activities or behaviors, right? And in Singapore, we have a large community of capital market intermediaries as well as wealth managers. And I think they face a different set of issues. First, market instability could create vulnerabilities that they need to be aware of, but also they will be seeing movements of funds in and out of their investment pot or trust pot, and they need to make sense of all of that. So they all have their challenges, and I think critical is to know your customer, to understand the customer behavior, and to be able to read it well, and assisted by technology and assisted by cooperation and collaboration with law enforcement, and hopefully as we progress, assisted by cooperation with each other within the industry.
Thanks a lot, Valerie. We are coming to an end, but before we leave the meeting, I would like to invite all panelists to just maybe discuss about, very shortly, in 1 or 2 sentences, the key message you want to bring across. What is the key lesson learned, was the main conclusion from this crisis? I will then not summarize the whole webinar, but I think there's 1 or 2 messages that we want to leave here. Heini, do you want to start us with kicking off?
I hope I'm not offending the real IT specialists here, but what we have learned because we had to now with this new challenge is making use of a way of working that has also been used in IT developments. It's focus, scrum, sprint. And it is, as was mentioned earlier, if everything is important, nothing's important. By picking up one issue, putting your heads together, think of everything that comes to your mind, sprint for a part of the solution, sprint on, you can actually achieve results. And there's a lot more to say, but these are my couple of sentences.
And knowing how much you are running, I certainly know that this is the right way to do for you and your colleagues. Marcus, anything you want to leave here? Last word.
As I said, public-private is essential for the future. For those in the private sector that haven't, put the resources towards this, strong advocacy that you do so. And on the public sector that hasn't begun down this road, be brave and trust, and that will change the game. In relation to fraud, it is continues to be a threat every day. We need to meet the expectations of funding the population in this challenging time, but also balance that with the risk of fraud. So how you work through that, and particularly within financial institutions, bringing your fraud, financial crime, and cyber teams together is absolutely essential. And then finally, the world is changing from the customer's perspective. It will never be the same. and therefore how we enable a far more digital environment from both a regulatory, a technology, and a product perspective is going to be essential. So those are the things I'd love people to take away.
Thanks, Marcus. Things will never be the same. Do you agree, William?
I do. I would leave the group with 3 points. One, public-private partnership and private-private partnership, information sharing that's based on trust and security. Second, communication with your teams, deeper communication with your teams, deeper communication with your supervisors, deeper communication with law enforcement. All of that will make a better financial crimes environment. And then finally, effectiveness. Build your program to be effective. First, comply with the law. Second, that's a foundation. Second, build your program to provide useful information to law enforcement, regulatory authorities, tax authorities, and security services as appropriate so that they can do the good work that they do. And third, build a program that protects your institution as best you can on a risk-based basis from financial crime. There's a great paper on that on the Wolfsburg website that you should all read. We've issued a statement on effectiveness, and you can go to the Wolfsburg website to get that.
Thank you very much. Valerie, you excited some of the co-panelists here with your statement so much, so you have the privilege of having the last word here.
Thank you very much. I would say focus on the core work. The core work is to be able to assess whether your customer is legitimate and going forward whether he remains legitimate. And I would also add that seize the opportunities during this crisis period to emerge stronger. Don't be afraid to look for opportunities to do adaptive transformation. And I would agree with my colleagues on the panel that an opportunity is here to leverage on private-public partnership. Opportunity is here to leverage on technology and digitalization and information sharing. And I will stop there. Thank you very much.
Thank you very much. And thank all of you, not only the panelists who have dedicated their precious time, some of them early in the morning, some of them late in the evening, even on a public holiday. Congratulations for that, Valerie. But also all the participants in the webinar, the audience. We have kept the numbers high all through the 90 minutes that we've been sharing together. It was a huge pleasure for me. Thanks a lot, the FATF Secretariat members who have made this all possible. Colby, Mei Ling, Alex, Neil, of course. Big applause from all the panelists. Thanks a lot. There's been a lot of work put into that, and you can see the success. I have yesterday started with a proverb from Desmond Tutu, and I will repeat it this time at the end because I think it's actually very appropriate for me, a very appropriate summary in one sentence of this webinar. Desmond Tutu said that the time of crisis is not just a time of anxiety and worry. It gives a chance, an opportunity to choose well or to choose badly. From what I heard today from all the panelists, we are about to choose well. And I wish you best of luck for the continuation of this important work. And take care, and look after your families too. Bye-bye, and see you hopefully at the next occasion, virtually or again physically. Goodbye, everyone. Thank you very much.
Bye-bye.
Goodbye. Thank you.
Bye. Well done, Daniel.